Okay, so now time to go straight into the show. Gold versus stocks and crypto. So I think we can really encompass this by looking at three things. Looking at how gold's performance has fared, or rather fared during the last recession and financial crisis in 2008 and 2009. Looking at gold's performance in 2020 during the pandemic, and looking at how gold has fared versus stocks and crypto in 2020. All right, so first up, this is a chart from TradingView that's looking at gold. Gold is in blue here versus stocks and equities. So we can do this by looking at indices. So looking at S&P 500 and Dow Jones and looking at how they fared. So if we start here, in 2007, they all kind of began at the same level, but as the financial crisis happened, look at this. Dow Jones and S&P 500 fell as low as 46% and 52%. So about half of the value was lost. But on the other hand, the value in gold during the last recession shot up 51%. So all the way past 2009. So in between this 2-year time frame, between 2007 and 2009, you basically quadrupled your money if your money was in gold. And I think this is very, very crucial to point out, okay? Because even though the charts show that gold went up 50%, actually no, hold on, sorry, not quadrupled, you basically tripled your money, right? So let's go through this with a hypothetical example, right? Let's say you have $1,000, okay? And in that span of 2 years, that $1,000 goes up 50%. So 1,000 times 0.5, you've turned $1,000 to $1,500 in 2 years just by having that in gold. Now let's say you have $1,000 in stocks, and right, Dow Jones, S&P 500, and that goes down 50%. So times 0.5, your $1,000 has gone all the way down to $500. So now you have $500 in stocks versus $1,500 in gold. That's a 3 times difference. So just by avoiding taking an L, I mean, as we say, you know the deal, please no don't take the L. Take no L's. So just by having your money in gold, you've really tripled the money you would have versus keeping that money in a very risky asset. Now, that's not to say stocks are not great. I mean, because historically speaking, long term, stocks outperform gold. Okay, so this is definitely not knocking stocks, but this is saying rather in times of pandemics or times of a recession, of having a financial crisis, being able to preserve your wealth and having a store of value is vital. It's vital. I mean, because this is how people become rich. Gold is not meant to be a tool to make you rich. Indirectly, it can make you rich, but gold is meant to be a store of value. It's meant to protect your wealth. And this is a perfect example of this, right? Looking at the last recession, so imagine you had $1,000 in stocks. This would be $500. And this other person who put their money in gold, they would have $1,500. So this person would be 3 times as richer as this person after the recession. That's the power of gold. All right, okay. Now going on to the next point. Now let's look at the current pandemic. How is gold performing? And how is gold performing versus stocks and also versus Bitcoin? Because obviously we're here at Token Metrics. We're pro crypto, pro BTC and Bitcoin. Looking at this, okay, Bitcoin since 2020 is down 2%, 2.5%. While stocks are down, S&P is down 14%, Dow Jones is down 18%. But gold is up 12%. So even in 2020, gold has outperformed Bitcoin, gold has outperformed the S&P 500, and gold has outperformed the Dow Jones. So, I mean, yes, I know we're pro crypto, but the proof is in the data. The proof is in the charts. Obviously, we like analytics and data, and gold is time tested as a store of value. Yes, we're pro crypto, but crypto is still nascent. It's still early. It's still finding itself. Think of crypto as a teenager, a teenager going through puberty. Maybe it has lots and lots of potential, but at the end of the day, gold is gold. Gold is the real store of value. We view cryptocurrencies as a form of speculation. Now, as also a means to get alpha, right? Cryptocurrencies are outside of the current pandemic. Cryptocurrencies have not been correlated to stocks and equities. So there are ways to diversify away from stocks while getting alpha. But during the liquidity crisis and crunch, everything has been going down. But stocks have been bouncing back up, as we see here, because they dropped all the way down to 36% here with the Dow Jones and S&P 500 about 32%. And now they've bounced back up. Amazon has, I believe, reached all-time highs. But however, gold has been the stablest of them all, even versus crypto. Crypto is the most volatile. Crypto going all the way, because back in mid-March, Bitcoin was the best performing asset. But as we all know, on Black Thursday, Bitcoin had that legendary crash. Dropped more than 30% in one day. But it's also bounced back up. It's bounced back faster than stocks. So in a way, Bitcoin and crypto has been a leading indicator because it's the only free market really left. Bitcoin is trading 24/7 globally, something that stock markets don't really have. So it's really a free market. So we see here it bounced back up very quickly, and now it's trying to catch up to gold, but it's still not quite there. Okay, so next up, let's look at how crypto and other cryptocurrencies have fared versus gold. And our team has done an in-depth review on Paxos Gold. And for those who don't know, Paxos Gold is a regulated gold-backed cryptocurrency. So we thought, let's also add this into our analysis. So if somebody wants to have exposure to gold without leaving the crypto ecosystem, they can do that. So looking at this chart here, if we, okay, so beginning of the year, we have BTC here, and BTC is pretty much, I think this is the BTC Coinbase pair. Let me just take a look. Yeah, Coinbase pair. Okay, so BTC versus Ripple has been pretty much the same. They're both around 0%. Then if we add Ethereum, Ethereum has really bounced back a lot. Ethereum is up almost 40% on the year. So Ethereum versus Pax Gold, which is about 12%, versus the entire crypto market, which is about 9% or 10%. So Ethereum has fared very, very well in this recession, which is pretty surprising. But I think that could be because of several factors. It could be because of DeFi, the decentralized finance. It could be because of Ethereum 2.0 coming out. So there's so many different things happening in the Ethereum space that it's really hard to pinpoint exactly why it's blowing up. But I think those two factors are probably the biggest factors that are causing Ethereum to fare well. But Ethereum was also very, very volatile. As we see here, it dropped 40% on Black Thursday. It dropped faster than Bitcoin, but it's been bouncing back up here. So all in all, what does this mean? Because we have lots of things going on here, but what, looking at 2020 and what's happened recently with the pandemic and looking at the last financial crisis in 2008, it's basically telling us, for any smart investor out there, having some exposure to gold is probably a good idea. Now, we're not saying go out there and sell crypto, sell stocks, and buy gold. No, but I'm saying if you're building a diversified cryptocurrency portfolio, having gold makes a lot of sense. Makes a lot of sense. Let me know what you think. Post down in the comments whether you think it makes sense to have gold alongside your crypto portfolio.